please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
To drill it down to individual stocks, this is our movers and shakers segment, and it's been a very weak listing for ICICI Securities. We got a sense of the demand when the company could only raise about 3,500 crore versus their planned raising of 4,000 crore, and today has not been a good day. Hi, Abhishek.
Well, Rima, you exactly summed it up that the lower subscription had hinted that, this issue is not priced to perfection or leaving room for investors. So let's just have a background, through this IPO, ICICI Bank actually gets about 5.5 rupees per share in terms of revenue generation, while their other holding in ICICI giving a 15% holding company discount works out to close to 12 rupees per share. But, this company has been losing market share both in terms of client and revenue over the last 3 to 4 years due to intense competition and increased boutique of products that peers are offering. So let's look at peer comparison on various scales. So you look at the client market share, it has reduced from 11.7% to about 10.1% in H1 FY18. The revenue market share loss is also the second highest after Axis Securities over the last 3 to 4 years. Now you look at their yields, the broking yields are below 2%, while for any other peer it's 2.2% plus. And apart from that, you look at the conversion of debit card to active customers, that has also been declining for ICICI Securities while it has increased for the peers. The dependency on online channel is very high, and over there we are seeing competition and various other peers also picking up. So you look at the overall market cap, about 14,600 odd crores is where it is trading, despite the fact that it is being the only capital market oriented player, while other peers who have a boutique of products at their offering are trading anywhere between 11,000 crore to 24,000 crore of market cap. Back to you.
Okay, all right. Thanks so much for that, Abhishek. Well, let's hop across to Sonia. She's telling us why Tata Motors is gaining in today's trading session. Sonia?
Well, Tata Motors has been losing a lot of ground over the last many months. In fact, it was the big underperformer in the auto space. Finally, after many, many months, we are seeing a recovery as far as the Jaguar Land Rover North America sales are concerned. Now, North America is a big market for Jaguar Land Rover. 20% of their revenues comes from there. And this time, both month-on-month and year-on-year, we've seen a pickup in sales. So overall, on a month-on-month basis, it's about a 10% growth. On a year-on-year basis, it's almost a 60%, on a month-on-month basis, it's a 60% growth, and on a year-on-year basis, it's almost a 10% growth that we've seen. Now, the Jaguar business is still under pressure, but it's a Land Rover business that has picked up quite a bit. Land Rover US sales up almost about 40-odd%. If you look at the trend as well, the last many months, we've seen an average of around 9 to 10,000 units, but this time, there's been a big surge there. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, Nalco, that's the other stock that's gaining an otherwise weakish market. Why is that? Because alumina prices have jumped up by around $100 in the month of March. Remember, in percentage terms, that'll be close to around 28% or thereabouts. Why exactly have alumina prices jumped up? Well, on this show itself, we had told you on March 22nd that, in fact, there was an outage at Brazil's largest alumina refinery, that's Nox Hydro Alunor. So on the back of that, in fact, we have seen that prices have shot up. Why is this refinery important? Because the total capacity is nearly around 6 million tons, and the authorities in Brazil have told them they have to shut down close to around 50% of that. For Nalco, it's important. Why? Because they have close to around 80% of their EBITDA coming in from alumina, and it's the best direct play really if you want to play the alumina story. Remember, Nalco management joined us on this show in March 2018. At that point of time, the prices had moved to around $420 per ton. The Nalco management told us that their prices moved from $350 to around $380, $390 on a per ton basis. So if you just compare it on a like-to-like basis, prices are up by nearly around 4 to 5% after surging. So from March 22nd till date, it's up another 5%. That explains why Nalco is up close to around 4% today, Sonia.
Okay, Rima. Thanks, Nigel, for that. But Sonia, it's back to you. Eicher Motors 2 capacity boost over there.
Yes, in fact, they have raised their capacity. Earlier, the target was 900,000 units of capacity by FY19. Now they've raised that to 950,000. And that's important because there were a lot of talk about how the demand for Royal Enfield bikes has slowed down. The management has, quashed all of these rumors by raising their capacity. They've also announced phase 2 of the third plant in Chennai. So production will increase from there. And brokerages have given this announcement a thumbs up. Morgan Stanley says that the capex guidance is 3% ahead of their estimates. This just shows that the company is confident that demand for Royal Enfield bikes is surging. CLSA has raised the FY19 EPS by 3%. They expect a 15% volume compounded annual growth over the next 3 years. And Deutsche Bank has said that apart from raising capacity, they've also announced phase 2 of their third plant in Chennai. That will help increase their production to 1.1 million units by FY20. And that's something that really will boost, the stock as well.
Okay, thank you very much for that, Sonia. Anisha, it's over to you. There is an increase in spot power prices.
Oh, well, yes, Rima, while we are grappling with the early onset of summer, it looks like it's good news for the short-term power producers and traders because the short-term tariffs of power have gone up substantially over the last couple of months. Now, of course, there is one of the reasons for early onset of summer that has pushed demand higher. And add to that the inavailability or unavailability of rakes, the coal rakes, as well as the low inventory level that we have seen at a lot of coal power plants across the country. That has really pushed these short-term prices higher. There are a lot of triggers lined up for the short-term power markets in the near term as well, and that is what the experts say, that it is unlikely that these high rates will come down in the next couple of months or so. The peak deficit tariff is close to 7 rupee per unit, which is almost double of what we were seeing in the years gone by. Now, first of the reasons that can sustain these levels of high merchant tariff is the summer, which is going to be harsher. Other than that, the Saubhagya scheme, which is expected to add a lot of households to the electricity net, is what is expected to boost demand. There have been no new power plants in the recent past, expanding the gap between demand and supply, and that can further aid the tariff rates there. Back to you.
Okay, all right. Thanks so much for that, Anisha. Well, Rima, coming across to you, Zensa is in focus. They won a big order.
Yes, it's a $79 million contract that the company has won from the city of San Diego. It will be executed in the next 4 years, but it can be extended by another 2 years as well. And this would be one of Zensar's largest wins from a single client, and it could make the San Diego client a top 10 client for the company. Now, HDFC Securities says it's about a $79 million contract spread over 4 years. So this annual revenue run rate of $20 million is close to about 4% of the company's expected revenues in FY18, and the deal will boost the company's infrastructure management services. Now, that is important because that's a segment which has not done well for the company. In 9 months of FY18, the company's overall revenue growth in dollar terms was about 2.5%. But if you strip out infra management, then the growth would have been in excess of 10%. Haitong says that initially the deal may it may impact the operating margins of the company because it will be executed on site, which means in Dallas and San Diego. But as the deal ramps up, they expect no impact on the operations. But as of now, it's a deal win boost for Zensar. Okay,
all right, Rima, thanks so much for that. Well, JNA Axles, that stock is buzzing in today's trading session. It's up closer to around 7%. That's on the back of a strong reporting that came in from the North America Class 8 truck orders. We spoke to Mr. Kulvin Shera, the executive director of the company, earlier today. He said that they're expecting a revenue growth of around 15 to around 20% in FY19, and also said they're increasing capacities in the tractor market.
As per for the Indian tractor market scenario, we are contributing around 50 to 55% in the Indian tractor market. Okay. And right now, we are planning to increase our capacities also. So that will contribute in our growth in the coming years. So right now, our total capacity is 4 million axle shafts. Regarding the SUV plant, the building is ready, and the machinery with long gestation periods, which we ordered, we are expecting them by 2018 to be delivered, by mid-2018 to be delivered. And plant will be running in financial year 19-20.
Okay, it's clearly all about the auto space, whether it's Tata Motors, iShares, GNA Axles, but even positive commentary coming in from the management of Mahindra & Mahindra. They say a pickup in the non-farm income is a big positive. Rajesh Jejurikar, the president of farm equipment sector, also goes on to say that he expects an 8 to 10% growth forecast for the tractor industry in FY19. Listen in.
We see all the demand drivers in a very positive frame at this point of time. One, of course, as you spoke about the monsoon, the outlook is good. We see non-farm income as one of the very important demand drivers. So all the investments that are happening, over 14 lakh crores, which have been allocated for rural infrastructure, which is either the Gram Yojana, which is the roads, rural housing, and so on and so forth, are all leading to an increase in non-farm income. And I think that cash flow coming into the economy is creating a very good rural buoyancy. We've had 2 years of about 20% growth. So at this point of time, we are staying with 8 to 10% growth forecast, and that's kind of the range. We normally like to review our forecast once the monsoons are in and, we get past June, July, but at this point of time, that's how we're looking at next year.
Well, AkzoNobel as well as buzzing in today's trading session. Well, it's up close to around 4 to around 5%. That's on the back of the board that will consider a buyback on April 6th. Mangalam joins us to run us through those details. Mangalam.
Absolutely, Nigel. So AkzoNobel is the company, remember, that makes Dulux paints, and when they announced that the board will meet to consider a buyback on April 6th, as we usually do for buybacks, here are a few statistics. The company's market cap is just above that 9,000 crore mark after today's move. They have an authorized total shareholders capital of close to around 972 crores, and they have cash of almost 200 crores, cash and current investments on their books of almost 200 crores. Now, if they go ahead with a 10% buyback, which is with board's approval, they can buy back about 97 crores. If they go the whole hog and take the shareholders' approval as well and buy back 242 crores, they can go ahead and buy back 242 crores. The most important thing, however, will be whether promoters participate or not, because remember, AkzoNobel promoters, they hold about 73% stake in the company, so their participation or non-participation can change the acceptance ratio quite significantly. 1.1% is if the company takes a board approval and the promoters participate, but that moves to about 10.8% if the company takes a shareholders approval and the promoters do not participate. That is something I'll be watching out for.
Okay, all right. Thanks so much for that, Mangalam. Well, here's a quick recap of all the buzzing stocks we just covered. We have ICICI Securities, Tata Motors, Nalco, iShares Motors, Zensar Technologies, GNA Axles, as well as Mahindra & Mahindra and AkzoNobel. Okay, barely holding on to the green, but the advance decline ratio is still well in favor of the advances. And after the last couple of trading sessions, well, some consolidation is par for the course. I guess the Nifty is still holding with a gain of around 10 points odd. But on to some source space news then. In the ongoing ICICI Bank Videocon controversy, CNBC TV18 learns that the SFIO has written to MCA seeking permission to probe the ICICI Bank Videocon case. Utkarsh brings us all those details. Utkarsh.
Nigel, as you said, the SFIO, Serious Fraud Investigation Office, has gone ahead and written to MCA asking a permission to go on with the probe in this case. It was in February, what we picked from our sources, is when SFIO got a complaint in this 3,250 crore rupees loan, which was given by ICICI Bank to Videocon. What we're picking up also is that SFIO has made a preliminary report, a preliminary inquiry report of the same, and has forwarded that to MCA as well. Now, what we're picking up is that it is in the next week that MCA will be giving a clarity to SFIO in the same. Remember that SFIO does not hold the power to sue or to take up a case on its own. It needs the Ministry of Corporate Affairs, the ministry which SFIO falls into, to give it a go-ahead to investigate this case. So clearly, we got to know about Enforcement Directorate and Income Tax yesterday probing into this case, and now we have the SFIO. So all the 4 agencies at this point of time are really looking at the ICICI Bank and Videocon case very closely.
Okay, thank you, Utkarsh, for all those details. Yes, surrounded by all these investigative agencies, the noise surrounding ICICI Bank and the Videocon, controversy only goes up. But let's move on to and talk about the sugar sector. The woes for sugar companies has just increased. The latest ISMA report indicates that the dues owed by the mill owners to the sugarcane farmers has now crossed 16,000 crore rupees due to a surge in sugar output and depressed prices. To discuss this and more, we're now joined by M. Manikam, the Executive Vice Chairman of Sakti Sugars, and Abhinash Verma, the Director General of ISMA. Good afternoon, gentlemen, and thanks so much for joining in. Abhinash, let me start with you. If you could just lay out the state of affairs for us with respect to the production numbers, currently the cost of producing sugar, what it is selling at, and what the arrears are.
Till about 31st of March, we have produced 28.2 million tons of sugar. And our estimate is 29.5 million tons, which seems to be very much achievable. There are about 331 sugar mills which were still working on the 1st of April. Secondly, on the cost of production this year on an all India average is about 35 rupees to 36 rupees per kilo, and that is at the mill gate. As far as the sugar prices are concerned, last year, last season was a good season for the industry, and the average prices that the industry got was about 36, 37. But considering the high production this year, a big surplus this year, which is the record ever, the sugar prices have fallen by almost about 7 rupees. Currently, in the northern part of the country, the ex-mill prices are around 30 rupees. In the western and southern part, it would be about 28.5 rupees. So clearly, there is a loss of anywhere about 7 to 9 rupees per kilo for the industry as of now.
Okay, all right. That's a bleak reading then, Mr. Verma. Production going up, prices are down, and in fact, I think production will be done at a loss as well as of now. A few points on that, sir. 16,000 crores is what you said was the total dues to be paid. If you could break it up for us geographically. And your sense, can prices even move lower from here? Global prices in some parts of the world are at 2.5-year highs. So is there a fear that prices can go even lower?
First of all, the breakup of the cane price areas, about 16,000 crore is what we are estimating should have been on the 31st of March this year. Out of that, almost about 7,500 crore would be from Uttar Pradesh, and about 2,500 to 3,000 crore each from Maharashtra and Karnataka. As far as the prices are concerned, yes, the sugar production in India is large. Next year again we are looking at a large sugar production and a sugar cane availability next year also, and that is actually putting a lot of pressure on the domestic sugar prices. But the recent step or the recent decision taken by the government, in which they have announced the MIEQ and given an export quota to each and every sugar mill to export almost about 2 million tons, that's a big step forward. But that's not enough, we think, because there's clearly a loss of about 10 rupees per kilo on such exports. What we have requested the government, and what we have been requesting, is the government has increased the sugar cane price by 11% this year, almost by 25 rupees per quintal of sugar cane, whereas the sugar prices have fallen by almost about 15%, as I mentioned earlier. So therefore there's clearly a mismatch between the increased sugar cane price and the depressed sugar prices. So we have requested the government that if they can compensate for some of that increased FRP by giving something directly to the farmers, that can reduce our burden, that can reduce the losses that we are incurring in the domestic market and that we would incur in the exports. So if the government helps us in the cane price, what they did 2 years back, by giving a part of the increased cane price, we will be coming forward and exporting even at a loss.
Okay. Has the government responded to your request? Do you see them agreeing to bear part of the increase in the sugarcane prices or bear part of the arrears and help out the farmers? What is the solution that is sought to the current crisis?
Let me give you a very positive point here. This government under Mr. Modi, about 2 years back in 15-16, for the first time ever in the history of the Indian sugar industry, participated and gave 4.5 rupees per quintal of sugar cane directly into the accounts of the farmers. That reduced the burden of the sugar mills to pay that much amount to the farmers. So it's nothing new. We have done it 2 years back. The response that we believe from the government is positive. Discussions are that the government may help the industry. How soon, when, how big? These are questions that we are waiting to be answered as soon as possible.
Okay, all right, Mr. Verma, just hold on to that thought. So no time frame yet in terms of when we can hear, but let's get in Mr. Manikam as well, Executive Vice Chairman of Shakti Sugars. Well, Mr. Manikam, the last time you joined us, you were telling us that things were looking bleak. If you could give us a sense, what's the total payables that you have in your books to these sugarcane farmers? If you could give us a sense there.
We don't have much because we haven't really crushed much. The Tamil Nadu mills are operating around 20% capacity. We are operating around 15 to 18%. So as of now, we don't have too much of cane arrears, at least in Tamil Nadu, not due to anything else except the lower production. But the main issue, as Avinash had said, is increasing of cane prices. I know the government has been increasing like 12% or 10% every year. We are targeting an inflation of 3%, but increasing the raw material by 11% and targeting an inflation of 3% doesn't seem to be logical. I think basically they should reduce cane prices if they want to give a signal to reduce production. Actually, today we need to produce less of sugar. We don't need 30 million tons. We need only 24 million tons, which means we are producing about 6 million tons of sugar in excess. And that's only possible if we are talking about reducing cane prices, which even with what Avinash was saying, by giving a subsidy, they are basically still encouraging the farmers to grow more sugarcane. And if you really look at it from the agricultural perspective, this is the only crop where there is some amount of pressure on the industry to pay the minimum FRP. No other product in agricultural commodities is of a system where industry is forced to pay, neither in cotton nor in oil seeds nor in pulses, or even wheat and rice for that matter. So they need to correct this anomaly and let the prices come down.
Mr. Manikam, while you may not have a problem of arrears to the farmers, you do have a problem because you're not producing enough sugar, and that will reflect in the company's financials. You're talking about operating at 15 to 18% capacity. What will the sugar segment revenues and losses look like for the company in the coming year then?
So we'll make huge losses this year because particularly I think we'll be having uncovered interest and part of depreciation. But even if we produce sugar, we'll have the same kind of losses. So like what Avinash was saying, we're losing 7 rupees per kilo. So if I produce more sugar, I'm losing. If I don't produce, I'm losing. So it's a situation where you say you're damned if you do and you're damned if you don't. So it's not a very nice situation.
Mr. Manikam, but the last time you joined us a month ago, you were telling us you're working with the restructuring package with banks. Any movement there?
Yeah, I think banks have kind of favorably looking at it. We are still working with them.
What kind of a restructuring package, sir, is it?
We are asking for, the next 1 or 2 years when there's a drought, that they should give us, reduced only the interest to be serviced or, even a holiday of interest as we request to the government.
Okay.
Yeah, or some from the government at this point of time.
Okay. Thank you very much, Mr. Verma as well as Mr. Manikam for joining in. So that is the picture for the sugar industry. Not looking good, particularly for the mill owners because they're saddled with huge losses, but also not good for the farmers because they're not getting the dues that they earn. Flat for the benchmark indices, a little bit of gains for the mid-cap index. So that's higher by close to about 0.2%. Keep your eye on Titan Industries. That is steadily losing ground. It entered into the Nifty yesterday. And in the last 2 days, the stock has lost close to about 3.5% after the 15% gain that it had in the prior month. Some news on NCC, they've bagged 4 orders worth 1,000 crore rupees through the month of March, but positive nonetheless. Stock is moved up, now up close to about 1.5%. We'll try and touch base with the management. In the meanwhile, let's invite Ashwini Gujral and Sandeep Bagli on the show now. Ashwini, marginally out, in the green, marginally outperforming the rest of the Asian markets for the second day in a row. Your thoughts?
Well, this is an upside which continues, and it's slow, but the drift is on the upside. Something interesting that I noted, that SFIO probe news actually took ICICI Bank higher from the lows. So that just means that bad news is not impacting the stock, and this stock is very critical to Bank Nifty as well as the Nifty. So if the weakest point in the market is now beginning to show strength, then obviously the market is not as weak as the early morning decline would show. So my sense is that right now we are at the point from where the breakout happened yesterday around quarter to 3 thereabouts, and this is a good time to get long on Nifty as well as Bank Nifty, because 10,250 to 70 and 24 550 570 thereabouts is that breakout level, and my sense is that we should move higher from here and probably close better, because HDFC Bank is also on the other hand moving up. So overall the bank expansion that started yesterday afternoon, that seems to be continuing. As far as other calls are concerned, Repco Home, which has had large declines, is finally now turning around. So that's a buy with a stop of 590, target of 615. Tata Motors, in spite of the 5% move, I think it could again pick up in the afternoon. So that is a buy with a stop of 355, target of 380. And PC Jeweler is a sell with a stop of 310, target of 295.
All right. Okay, Ashwini, thanks so much for that. Well, Sandeep Bogley as well joins into this conversation. Sandeep, what calls do you have for us today? Okay, I think we'll get back to Sandeep in just a bit, but I think he's back with us. All right, I think he's, for the time being, let's just take a look at the European markets. Let's see how they have opened up today. Remember in yesterday's trading session, they were reacting to the bad news that they had overnight. So they ended in the red. Today, in fact, they're indicating a bit of a bounce. So it's open mildly in the green. The CAC as well as the FTSE, both of them up close to around 1/10 to around 0.2%. So that's good news. Those markets opening up stable. No big shocks coming out of there. All the three frontliners, at least, they have opened up mildly in the green. I'll tell you what, we'll slip into a short break. You come back, we'll try to reconnect with Sandeep Bogley, and also we'll get chatting with the management of Munjal Shova. Stay with us.